Welcome back. Well, the market's doing well and financials are leading it 2.5% higher on the bank nifty. So that's looking really strong. And in fact, let's not talk about some financials. We should focus on Shriram Transport Finance to get a sense of their view on the CV cycle, whether it's started to see an upcycle and which segments are witnessing growth. Umesh Revankar, Vice Chairman and MD at Shriram Transport, is now joining us. Mr. Revankar, good morning. Thanks a lot for joining us. That's the first question then. What's your view on the CV cycle? Is it now firmly in an upcycle? And are you seeing benefit of that on ground in terms of your numbers?
Yeah, good morning. The CV cycle is definitely moving up and month on month it is strengthening. September numbers were all-time high in the recent times. The demand is definitely for the construction equipment, in the sense the dumper and tipper. The construction is something which is in high demand. Real estate and infrastructure projects are going on stream, and that's really helping the demand. Plus, along with the infrastructure, the demand for the movement of the steel cement is also improving. So heavy vehicle is witnessing continuous month-on-month growth. So I think with the heavy segment growing, all the LCV, ICV segment also is keeping up the pace. And I think the demand is almost in all the sector. And I think the way it is moving, it may continue for some more time.
Okay. So what do you see, Mr. Revankar, good morning, always good talking with you. This rise in fuel costs, we've seen an overall up move. What do you think the impact of that would be on freight rates and eventually on demand?
The fuel price went up in between, and post the government reducing tax, then it has come back. In fact, the fuel price is at last year's December level. So I don't think that's that whatever the impact of the fuel price has happened during the peak of the increase around March, April. After that, it has come down. So I don't think it will have any negative impact. In fact, the international crude price coming down will have a positive impact, and I don't think there is further surprise on the fuel price. And when demand is good, when the economy is going strong, normally the ability to pass on will be much higher, and the operators are able to pass on all the fuel increase or whatever the input cost increase to the either shipper or to the consumer.
Okay, so since you said that the CV cycle is, definitely moving up and September CV sales have been at an all-time high, would you want to scale up your own full-year forecast on what growth would look like? We were speaking to Shriram Finance a couple of days ago, and they said that this is just the start of a multi-year upcycle in the commercial vehicle space. Would you agree? And if yes, what would the growth look like for you?
See, we had given the guidance of 12% growth on our AUM on standalone commercial vehicle activity basis, and that will remain for the rest of the year. We don't want to change the guidance in between. However, if the demand keeps going up, we'll definitely take the what I call the market share of the chain. So we'll be able to. We have that ability and the network to scale up the business. So right now, I feel we are in the sweet spot, and that should continue for at least 6 months. But interest rate hike and the impact of that is something which need to be a little cautious about. So overall, we plan to grow as a combined entity 15%, and the earlier guidance will continue to remain.
So combined entity growth will be about 15%, and you hold on to your earlier guidance. I take your point. I mean, higher interest rates, higher inflation could hit demand in the near term. That is the uncertainty. But I wanted to ask you about your restructured book. In terms of asset quality, what are you looking at, and how much of your restructured book can go bad?
See, our total restructured book was 1% of the AUM. So it is insignificant. And even that has performed quite well. So that had not given us any headache, and it's a very small portion of our book. So I think asset quality is all-time improving, because all the sectors and segments have come back and bounced back, and including the school and the staff transportation, which was the last to come back to normalcy. Even that is doing well. So we don't really see any challenge. So quarter on quarter, we expect the asset quality to improve.
Okay, expect the asset quality to improve quarter on quarter. And just coming back to that earlier discussion that we were having about, some of your peers talking about this being the start of a multi-year upcycle in commercial vehicles. Generally, when the commercial vehicle uptrend starts, it lasts for about 3-4 years. Is that your view this time around as well? And what's your own thought on, how the progress could take place?
I do definitely agree with that, because this time around the upcycle had delayed because of the COVID and the price hike in the new vehicle price. There was a postponement of upcycle, and that postponement will give us a longer upcycle. So I feel this time the upcycle will remain for at least 3 to 4 years. The earlier peak was on commercial vehicle 1 million units, and last year we ended up with around 700,000 units. So we have a lot of gap to catch up. So it will take another 2 to 3 years to catch up. Then normally we cross the earlier peak and go further. So I believe it may take 3 to 4 years to reach the peak before it may start slowing down.
Okay, well, thank